Alright guys, and it's Thursday, one day to go. Before we start, I just want to mention again, feels like some people are not understanding the valuable content that I'm giving out on those webinars I do every Tuesday and Thursday. Therefore, today we're going to have one webinar from 8 to 9 p.m. on Australia time, Sydney time more specifically. So if you haven't registered yet, what are you waiting for? Alright, go on the description of this video or go to our ACY website, go and register yourself. As well as you are there, on the description of the video, I will leave the Telegram link. So if you haven't been into the Telegram yet, just go now. It's 100% free as always been, but before you would have to join the webinar. So it's just down here. It doesn't take 5 minutes. It doesn't take even 5 seconds. All right. So you just click. You're going to redirect yourself to the to the Telegram. Boom. That's it. Done. All right. So what I want to talk today. Well, we're going to have a very interesting and very volatile news tonight from the US, and there will be the retail sales, the PPI, and the core PPI, of course, and the initial jobless claims. Let's run over a few of those news pretty quick. But first of all, we have at 11:30 at the night for Australia time. So retail sales month over month is expected to have a really big growth because the previous was negative 0.8%. As the consensus now for the February, all right, from January was negative, and then now February, they're expecting a 0.8% positive. So that means 100%, pretty much 100% from negative 0.8% to positive 0.8%, 100% gain. That's massive, all right? That's massive. Even though coming positive, we may have a little of a, bit of a strength for the US dollar. Now, the core retail sales month over month is expected to come 90% above what the previous was. So the previous was negative 0.6%, and now the consensus for this month over month, February, is expected to be 0.5%. All right. PPI is very important. I've explained it already. What's the PPI? The Producer Price Index. It's basically the inflation for the producers, for the business. As we did have a higher inflation, therefore we may have a higher PPI as well, or as expected, okay, because this one is month over month. So when we look here, it says 0.3%, same as the previous 0.3% on January. My takes on this one, that it would be as expected or a little bit negative. I do think that inflation is sticky, but I think that the risks are tilted to the downside. Therefore, always, when we have a CPI or PPI or anything that related to inflation on US, I'm looking to come as expected or tilted to the downside. Initial jobless claims is expected to come a bit higher, a tad up higher, 1,000 higher than expected. 1,000 higher than the previous, and the consensus is 218,000, as the previous was 217,000. Now, the core PPI, of course, would be 0.2%, as the previous was 0.5%. All right, guys. So this is all from me today. Just pay attention on New York session, because this will be 30 minutes after New York Open. So there is a lot of volatility coming to euro dollar, pound dollar, dollar yen, dollar CAD, and all of those other currencies that holds the US dollar on the base or on the quote. Trade safe, use risk management, and if you have any questions, save for tonight. I will be live interacting with you just on the webinar. So if you haven't registered yet, you already know, go to the website, register yourself, and I see you tonight. Before we go, please subscribe to our channel, give us a thumbs up on this video, and share this knowledge with your friends, all right? Because may he or she or your friends like to know a little bit more about fundamentals and what is actually happening on the core PPI, on the PPI, on the retail sales from US. All right, guys, I hope everyone have a good day ahead, and I see you in the next video.